the daily price chart for Chewy Incorporated, stock ticker CHWY. So as we can see here, the stock for the most part is starting to base at this prior support zone that we have outlined previously. The overall share price has started to decline after seeing some periods of prior gains. We are currently caught inside of the exponential moving average cluster, which currently does suggest a period of indecision or sideways consolidation type trading activity. So overall, if we're looking at this from a bit of a longer term perspective here, we can see that the indicator reading continues to rise. We're still seeing a supported trend line here on the relative strength index on the bottom of this chart, purple line on the bottom of this chart. So overall momentum does remain favorable, even though we are in a period of sideways to lower trading activity here. So overall, we will have to sort of watch for activity in the broader markets because we have been seeing a large amount of selling pressure recently, and this is most likely sort of leading to these declines, or at least making it much more difficult for the stock to move higher from these lows. So in this next chart, we'll sort of move down here to the hourly time frame. Get a bit of a closer look here at these recent price movements. So as we can see here, the hourly chart shows that this dominant trend wave move here has resulted in eventual declines that came into contact with the 618 retracement, 61.8% Fibonacci retracement of this dominant trending move here, which stretches from roughly the end of April all the way to this would be the middle of June, roughly second half of June. If we're looking at this trending move here, we can see that these declines have now come into contact with the 618 retracement for the second time. So we can see this happening here. This is now, you would at least have to call this a double bottom, but it's, you could really probably call this at least probably a triple bottom because this area has been tested on 3 separate occasions. Currently, this level comes in at roughly 2380, and this is now the main level to watch to the downside. If we do see some declines in the broader market, it wouldn't be totally surprising to see, a bit of a move lower here. There would be no exponential moving average support to be found lower because we have already broken through those exponential moving averages. But the current, historical support zone that would be next in line comes in at roughly 2550. Sorry, that would be 2180 is the I was looking at the price high for this region here. So this prior support zone here comes in at roughly 2180. So that would be the next historical support zone to the downside. From here, we would be looking at another Fibonacci retracement at the 786 retracement, 78.6% Fibonacci retracement of this dominant trending move here, which would come in just below the $20 mark, roughly 1975. So, if we're going down to the hourly time frames, the indicator reading is a bit different in nature because we are seeing more of a downtrend line at this point. So this does suggest that negative momentum is in place, even though we're sort of flatlining here just above this 2380 level. One other point to note here is the fact that we do have a decline here in trading volumes. It's a bit small in this chart, but as we can see here, we had some prior spikes in the trading activity that was being directed toward this stock. But since then, since roughly, we can call this the second half of June, roughly June 27, we can see that the overall trading volumes here have really slowed down. We're not seeing as much activity being directed to this stock. So, these declines here, it's not so much that, we're seeing an introduction of selling pressure as much as we're just seeing sort of a lack of interest. People are sort of moving out of this stock. And that doesn't necessarily mean that, on its own, that doesn't mean that traders should be avoiding it. In many cases, the reverse can be the case. If people are starting to lose interest in a stock, it might lose value for that reason alone, even though the underlying outlook might remain favorable. So, if we do apply that to the situation here, that would mean that this ultimately could be creating some new buying opportunities at these lower levels. If we're going to start to construct if we're going to start to construct a trade here, we could be looking at a potential downside of roughly $4. If we're looking at this 786 retracement as a possible line in the sand to the downside, because if we did see a retrace below this 786 retracement, the risk for a full retrace then increases. So at that point, if we did lose this 1980 support zone here, you'd probably looking at a move back toward roughly 1440. A trade at current levels would make sense. You could stop out below 1980, and then with your upside target, you'd really be looking at a move back into this 3940 zone, which was this spike high region, which came in during the June 27 trading session. This was the trading session where the share price actually spiked to 3907. So there is a fair amount of upside here. If we're going to look at this stock from a risk to reward basis, if we pull out to the daily charts a bit here, we can see that the scope for possible gains here is much higher if we go back further in time. We did have this spike into 39 here. I'm really viewing this level as more of a 4080 type level, which would be the highs from June 2023. Overall, we're currently we're still trading below this $25 mark. So as long as we're not seeing any major declines in the broader market, the stock does have a fair amount of upside potential here, even though we have seen some retracements more recently. We can quickly look at the 4-hour chart here just to get a final look at this. Fibonacci retracement zone that we're watching here. A downside break here would be important because on the 4-hour chart, this would also mean that we're starting to lose some of the exponential moving averages, such as this purple line here, which is the 100 period EMA. So we do have support at current levels, and this does sort of support the outlook for bullish trades from a risk to reward perspective. So here's the current market analysis for Chewy Incorporated, stock ticker CHWY. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.